What's going on, dividend chasers? Dividend Bloodhound here with another investing episode. In this episode we're talking about my free trade dividend portfolio update and why did I sell UPS. Following on from that, we're going to look at what market buys I've conducted this week before ex-dividend dates and repatriating my money to the UK from the US stock market to the UK stock market. Stay tuned. Do subscribe to the channel, do hit the like button if this video does bring you some value, and I'll catch you on the other side. Roll the intro. Hello again guys, welcome to the video. So we're going to talk about my free trade dividend portfolio update now, and also moving on to quickly, before I take it into the app, why I sold my UPS position even though it was 70% up. And then we're going to look at where I moved that money to in terms of repatriating some of my money from the US stock market to the UK stock market and why I did that. So my dividend portfolio is the portfolio that I'm using to build passive income, and hopefully in years to come will be my passive income and hopefully a source of my retirement money. Maybe not all of it, but it will be a big source of income for me. And I'm going to hold this with free trade in an ISA until I'm ready to start using it. My growth portfolio is with Trading 212, and you'll see that in other investing episodes. The free trade portfolio is currently down £100 or so at the moment, not dramatically so, but I'm not expecting any major changes to this in the near term. I'm going to keep building, it's not bothering me at all. I'm going to keep building my money in the account, and hopefully it's the money that I do deposit, because it's been put in at such a dark time in terms of the economies at the moment, in terms of the recession, it will actually pay off in the longer term. So moving on to why did I sell UPS? There's two reasons for that. I was 70% up on the position. I'd only had one major share, and then a small fractional share that I bought with a dividend from the company. And I was up well over £50 on this one share. And if you look at the stock chart at the moment, the stock has just gone to the moon, and the price that it's at is just way too overvalued for me. I knew I would make some money on it buying it so low, and I know the old analogy is buy low, sell high, but making 70% on a company that's well established is just way too high for me. And then buying back in or investing your dividends back into it would just not buy the same sort of value that I was looking for. So I cashed in my profits, and then I used that money to repatriate it to the UK, and then bought some stocks before the ex-dividend date over here in the UK. And then I obviously made a little deposit, my monthly deposit, from another investing portfolio into this account, so I can buy some more UK stocks, which is where I'm trying to even up the balance in my portfolio to roughly 50-50 between UK and US stocks, because I know that the US stock market is amazing, it's the best in the world, but I also don't want to pay the 15% dividend tax too much if I can help it. So my market sales for this week were Nike. I sold that 12% up. I made £10. I've just decided that their dividend was way too low, and yes, it was a dividend growth stock, but with the dividend tax, it just really wasn't worth my time in the next 5 years, and I think that money could be better spent elsewhere. And as I was £10 up, I decided to just cash that out and move that money back to the UK. I then sold UPS, which I've already mentioned, and then I sold the SPDR UK dividend ETF. I sold 5 shares of that for £50. I was £2 up on that. Then I reinvested that money from the SPDR straight into the FTSE 100 and FTSE 250 ETFs with Vanguard. So that money just moved from one ETF to the other. But I'm trying to consolidate the positions in my portfolio at the moment as well, so I'm not endlessly streaming through stock after stock after stock. So my market buys this month are as follows. There is a little bit of a list because I diversified the money that I returned, but I bought 4 shares in GSK before ex-dividend, 1 in Halma, which if you have a look at one of my previous videos, it's well over dividend aristocrat status, been growing its dividend for well over 40 years, so it really ticks a lot of boxes for me, so I really wanted to start a position in that one. I also bought 4 shares in Daigyo or Daigo, or however you decide to say it, also before ex-dividend date. I bought 3 shares in Shell. I know that some, again before ex-dividend date, I know some people are against energy, but I know that Shell are moving towards renewables, so I'm really on board with this, and I think they're one of the first big oil companies to start doing so. So I'm well on board with that. I'm going to back them, and they've got a 3.5% dividend yield, and they've got a great commitment to the dividend. So yes, they trimmed it recently, but they've been paying it since the Second World War, and I believe when the health crisis is over and demand returns for oil, they're only going to grow that dividend back to the sort of highs that it was on before, and buying in now will also increase in the stock price as well. I got into on BP as well, even though they cut their dividend down to a forward yield of 5.5%. Do check out my BP analysis video below. I bought 6 shares in them as well, so now that I know going forward we've got a 5% yield, they're also going to smash in the renewable energy as well. This is really good to hear from 2 big giant energy companies. That's what they're going to become. They're going to slowly wean away from oil and use that money to invest in renewable energy, which I think is great. And then I'm going to be rewarded twice really. I'm going to get a really good dividend yield out of the company, and then I'm going to get some share price appreciation as well. And as mentioned, I bought 1 slice of the FTSE 100 ETF, 1 slice of the FTSE 250 ETF, a share in Pennon Water, the utility company, 2 shares in Tate and Lyle and the recent dip that they had, 1 in Sage because I really like that software company. They've got a great dividend history as well. I've also done some analysis on this in a previous video, so I'm just adding to them, slowly building my position in all of them. 1 small share in LG, because I had a spare £2 in my account basically, and I just wanted to get it in before their ex-dividend date as well. It takes me up to over 50 shares in that company, so I should be able to compound and buy a share each time I get a dividend from Legal & General. I know they only come round every 6 months, but that's an extra share each time I buy, and I'm only going to add to that position as well. And then finally, I bought a share in CCL, or Carnival Cruises obviously, just to average down that position. You'll see in the portfolio when I get you guys in there that I am still down quite a bit on that position, but my thinking is my position isn't that big, so I can average it down, and then once it gets to a certain point I can either offload it at a small loss, or if it just creeps up to 12, 13, 14 pounds a share, that might be enough for me to just creep a few pence profit and then offload it and get rid of it and reinvest that money off elsewhere. I also received 1 dividend so far this month in August, and that was with AT&T. I'll show you it when I got in there, and I reinvest that straight back into AT&T as well. Their price is a bargain at the moment. I know some people are concerned about the debt levels, but I'm not. They've got more than enough cash flow to cover the dividend, so I'm confident that it's going to stay exactly where it is, and it's just great to lock in a really good yield at the moment. I'm very confident in that company, and that's exactly why it's one of the biggest positions in my portfolio, and actually my biggest dividend payer at the moment. That being said, I'm going to take you into the app now, and we'll actually have a look properly at the charts and where my positions are. I'll catch you in there. Hey guys, welcome to the FREETRADE Dividend Portfolio update. We're actually into the FREETRADE app now. So as you can see, portfolio value is sitting at £5,076.21p and currently down £118.34p. And here you can see my largest positions. Also, if you want a free share up to £200, do email dividendbloodhoundinvesting@gmail.com. The link is in the comments below, and I can get you a free share up to £200. So you can massively benefit and kickstart your investing journey. Anyway, so here we have Boeing currently at £543 or 26% down for 4 shares, and that is a whopping £192 out of pocket at the moment. It's a big position, but I have confidence in this company going forward. As mentioned, I've got my AT&T position, £483 for 21 and a bit shares, down 14% at the moment. 3M crept back up to plus 1% recently, £398 for 3.1 shares. Visa 2.6 shares, up 0.31%. This one was down recently, but it's just recovered to £394. AbbVie is at £367 for 5 shares, 9.8% up. Coca-Cola is at £333 for, as near as makes no difference, 9 shares. I'm 6% down on these guys, £24. Shell is my biggest UK holding at the moment, £226 at 20 shares, down 31%. Share price is £11.33 at the moment. I'm £102 down on these guys, working hard to average down, but still a little bit of a way to go, as you can see. Next up is Home Depot. This is another stock that has flown at the moment. I'm currently plus 44% on it. So it's at $281 per share. I bought in, it's now worth £219. I bought in at £148. I'm plus 44% or £67. It's getting harder and harder not to consider selling this one as well, even though it's got a fantastic history. I just can't ignore just how much I'm making on this one, and I can reinvest it in the UK market for a higher yield. Pepsi has just sat where it is. If you watch my last 3 portfolio reviews over the last few months, it has stayed at about this margin, to be fair. Paying its dividend nicely, but no price increase, no price decrease. IBM still sitting just down at minus 10%. Nice big dividend yield on these guys though, which is why I keep them, but I'd like to be a little bit less than £20 down on them. Microsoft is next at plus 30%, £163 for the 1.02 shares. I bought a little bit extra, £4 extra when they paid us this very small dividend. I'm up 30% or £38. Decision point on these guys as well, because I'm buying Microsoft in drips and drabs in my growth portfolio over on Trading 212. So I'm considering selling this position, reinvesting that money in higher dividend paying stocks, and then having Microsoft held elsewhere. But that is a TBC on that one. Next up is McDonald's, made a little bit of a recovery, so 4.7% up, £160 for my 1 share. Caterpillar's also bounced back into the green as well. This was in the red last time I gave the update. Now it's at £122, 6.96% up. Legal & General has just dropped a little smidge since its ex-dividend date has now gone, so people have exited. I'm 31p down, but I have my 50 shares and a decent dividend coming in the next couple of months or so. BP, as we've already spoken about, is now at minus 29%. I have 38 shares, so I averaged down a little bit, £111. These are the new additions then, so I now have 7 shares, over £100 worth of GSK, which I'm very pleased about, bought in before the ex-dividend. I am £4.48 down at the moment. I will average this one down a smidge, but it's not, well, it doesn't really need averaging down that much, but I'm going to continue to buy it. Got a lot of faith in GSK and a really nice, solid dividend yield as well. Dagio here as well. People have exited this one over the last couple of days as well. £104 for 4 shares. Raytheon, I do need to add to this one as well, because it's really, really well thought of company, especially now that it's merged with United Technologies. I bought a small little, with their dividend, I bought a small extra position. That's what's caused the glitch here. I do need to add to this one as well. Disney's up quite nicely. No sign of the dividend returning for these guys yet, but I am up £13, which is quite nice on just the 1 share, or 16%. Unilever, I'm up 4% on. They had a really good quarterly results recently, which has spiked their share price. Starbucks has stayed just about the same, £62.97 for 1.05 shares. or 0.84% down. And then we have Carnival, I'm 39% down on, which is a little bit better than it has been. They're still under £10 a share at the moment. My average is £16. I want to try and bring that down to 14 or 13 if I can, allowing me to exit out of this company a little bit easier if I want to. And then lastly, we have the positions that are all less than £50 at the moment. So I've got FTSE 250, FTSE 100, all sitting at approximately the same level. Commercial property has been making a little bit of a recovery. We're now up to 69 pence a share. That's happened very recently, or nearly 70 pence. They're slowly coming back. They're still not paying their monthly dividend at the moment. I'm £18 down. Just going to have to be patient with this one. And whether I sell or not, I don't know. I'll wait and see. I do want to ditch the SP Dividend Aristocrat here when it gets closer to not making a loss, and then move that money into the SP 500 Vanguard ETF to just get a bit of a broader stroke across the entire SP 500. But Eurostock's high dividend here, down 13% at the moment, but has recovered slightly. Helmer I've spoken about in another video. Got a lot of faith in this company. The same with Sage. They have an excellent dividend history. Pennon and National Grid, also high dividend payers, so I'll be looking to add to these in the near future. Tate & Lyle's the new position that I've added. 2 shares, just down a smidge at the moment. Nowhere near ex-dividend dates or anything like that on them. Need to build a position. Apple, 40% up. Oh, how I wish I had bought more of this company pre the announced stock split. Not really sure what to do with this one now because it's very, very expensive to buy in now. So I've sort of just left it alone, and I might just continue to buy in after the stock split now, see where I end up. Then we've got HSBC down 30%. No sign of them paying their dividends for the rest of the year. But it might be a good time to buy in a decent position and then wait out until the dividends do return. And then there should be some appreciation in the share price as well. Qualcomm's also done very well. They have a recent court case closed in their favour, so the dividend is now much safer than it previously was. Again, I need to add to that position. Computer chips are only going to get more and more involved in our lives as we go on. Then we have Johnson & Johnson, Lockheed Martin, need to add to these positions. I eventually want to get to having at least every stock in my portfolio with £100. I am slowing down with the new acquisitions now, so what I've sort of got is what I've got. I don't really want to add too many more to it. Apart from the ones that are on this watch list, I am considering adding. The SP 500, Croda, Spirax and Intertech are definitely going into the portfolio as soon as I have the money. Relics, Electro Components, I'm not so sure about yet. Need to do some more research on them. Same with Zoetis and Softcat. I do like Softcat, but I'm feeling I might be too tech heavy, so that might not make the cut either. But definitely the top 4 will be in there, and then I might just leave it at that and just build on what I have got. You can quickly see what I've done in my activity here, so you can see my stock market buys as listed earlier on, and then you can see my sell position there in UPS and Nike. My AT&T dividend is a whopping £6.45, very, very pleased with that. Then my top up that came right at the end of the month. And that wraps us up, so I'll see you back in the outside world. Hey guys, welcome back to the real world. That concludes the FREETRADE Dividend Portfolio update. And hopefully I answered the question of why I sold my UPS position despite being so high up in it. And then I also covered why I've bought some of the UK stocks just before ex-dividend date and getting right in there just before the cut-off point to get that dividend when they arrive. I hope you've enjoyed the video. It's been absolutely fantastic to make. Do hit the like button if this video has brought you some value, or if you're brand new here, please consider subscribing and even ticking that notification bell as well to get notified of brand new portfolio updates and other investing content that I produce. I do produce videos on a Monday, a Wednesday and a Friday, and sometimes some extra nuggets if there's big stock market news to add to that as well. Absolute pleasure as always guys. See you in the next episode. Bye bye.